Hello and welcome to this week's edition of Tax in 10 with me, Rachel de Souza, and Andrew Robbins. We're both tax partners in RSM's London office and have a wealth of experience in dealing with a wide range of private client matters. Your feedback is really valuable to us, so please keep it coming, especially if you have thoughts on any topics that you would like us to cover.
This week, we thought we'd have a look at an issue which both Rachel and I have been seeing a big increase in relation to recently, which is people actually coming to the UK. One of the things that's been driving this in the short term is that 31st January sees the introduction of a new regime known as the British National Overseas Visa Programme, or the BNO, which gives UK residence rights to certain Hong Kong citizens. And off the back of that, we've both been seeing an increase in inquiries from people in Hong Kong looking to relocate to the UK, obviously COVID permitting. So that sort of prompted us to think about what are the issues that anybody coming to the UK to live needs to think about. And before we get into the details, some of the planning points that are relevant, I want to start by highlighting a trap relating to people's domicile. It used to be the case that, let's say I was born in the UK parents, but we emigrated to Australia when I was 3 years old. I lived my entire adult life in Australia. I intend to live and die in Australia. I'm an Australian. In the good old days, prior to 2017, that would have made me Australian domiciled. But since 2017, the rules have changed in the UK, and now if I come back to live in the UK, even only for a short period, I will be treated as UK domiciled as soon as I get back if I was born here to a UK father. This has an impact on people who are reasonably enough expecting to come to the UK and qualify for the remittance basis of taxation, so they only get taxed on their UK income and gains, but who can discover after the event they're really taxable on their worldwide income and gains. It has a big impact on planning and it can come as a bit of a shock. So I wanted to highlight the fact that it's important right at the beginning of a conversation with somebody moving to the UK to ask the right questions, because the chances are that the individual themselves won't have a clue that it's even relevant. I also have another trap.
Oh, for heaven's sakes, Andrew, it's always doom and gloom with you.
I prefer to think of it as being realistic about the world, not being doom and gloom. Thank you very much. But I wanted to highlight as well the fact that under the slightly odd UK residence system, you can become UK tax resident before you've actually set foot in the UK. Basically, residence in the UK normally runs on a complete tax year. So if you moved to the UK in July, you might find that you're treated as resident in the UK since April. And again, if you're planning in advance of coming here, it's important to understand that so that you take the necessary steps before you arrive without being tripped up by the peculiarities of our rules.
That's true. And assuming we don't fall into any of Andrew's traps and the individual concerned is not UK domiciled, what we should be thinking about is some appropriate pre-arrival planning opportunities, which are, in the most part, relatively easy to take advantage of. The first one that comes to mind is to rebase your portfolio.
You just said that this is easy to take advantage of, but I'm immediately thinking that sounds complicated. What does that mean, Rachel?
It's not really complicated at all. It's just a bit of jargon. So what it means is that we effectively bed and breakfast our shares. And what that means is that we sell them on day one and immediately buy them back on day two. So actually the overall makeup of your portfolio doesn't change. But in this way, for UK tax purposes, the base cost of the shares will be the market value of the shares when you buy them on day two, rather than the original cost that you bought them at in history. So if you then sell those shares once you have become UK resident, you are not taxed in the UK on the part of the gains that arose before you became to live here. Of course, before doing any of this, you do need to check what the tax position will be in your current country of residence, because you might find there are tax implications there. But it's just worth reiterating that for non-residents, there is no need to leave the 30 days between the sale and buyback for it to be effective. In some cases, you can also rebase illiquid assets by transferring ownership to a trust or other family members.
And I think it's a really important point, because it's not intuitive to think that the value of my shares increased 100% before I came to the UK, but that increase had nothing to do with my time here. I become UK resident, I sell the shares 2 years later, and I'm taxed on the whole of that historic gain, even though it arose before I arrived. I think a lot of people potentially get caught out by that because it doesn't seem fair. But of course, as we know, tax doesn't care whether it's fair or not. It just says what are the rules, and it's an important rule to pick up. Another important rule to think about is arranging your financial affairs, where you hold your cash, for example, so that you can bring money to the UK without it being taxed. And this is something we see all the time with people moving to the UK, where if you plan before you arrive and you set up appropriate different bank accounts so that you can separate out what we would call clean capital, money that you can bring to the UK tax-free, you can actually arrange to have an awful lot of funds that can come here without triggering any tax charges at all. But if you wait and do things after you've arrived, it may be impossible to do the same planning, or it may be much less flexible. And you can find yourselves bringing money to the UK and being taxed on it, where if you'd thought about it earlier, there will be no tax at all. So thinking in advance, setting up bank accounts and doing your rebasing, Rachel, can save an awful lot of money at a quite limited amount of effort.
Absolutely agree.
I think it's also worth, as part of that, thinking about what type of assets you own. Because if you have UK investments, typically, let's say UK stocks and shares, if you're going to be in the UK and taxable on the remittance basis, so only taxable on your UK income and gains, you'll probably not want to hold UK assets. Because if you swap those for foreign assets, let's say if you've got UK shares and swap them for foreign shares, the dividends on those foreign shares will only be taxed if you use them in the UK. The dividends on the UK shares will be taxed whatever you do. So it's worth a review of the nature of your investments, as well as simply, are things standing at a profit? Should we rebase them?
And I think the other point is, if you do wish to hold UK assets, other than real estate, think about using an offshore insurance bond or an offshore company.
Yep.
And lastly, it can often be an idea to remit funds to the UK before you actually get here. However, just with this course of action, bear in mind that it can take an awfully long time to set up a new UK bank account. So you will need to plan well in advance if you want to take advantage of doing that.
So the message, I think, with all of this is, if you're coming to the UK, plan in advance, and ideally, we're talking, start thinking about it, if you can, 9 months before you come here.
At least.
so that you've got the time to get everything prepared so that it's ready to go when you arrive.
Right, with lockdown in full swing, Andrew, I expect you found plenty of cultural things that could entertain me. So what's on offer this week?
So I thought we'd have a look at a film this week. It's actually something that was on the BBC over Christmas. It may still be available on iPlayer when you watch this, but it's definitely available on things like Netflix or Amazon Prime. And it is the wonderfully dark Death of Stalin. Death of Stalin does what it says on the tin. It's about the historical position, what really happened in Russia after Stalin's death. It's a very black comedy. It's really quite scary in terms of what people were living through and the sort of the terror of living within that Soviet regime. And yet at the same time, it made me laugh out loud. I don't know how many times. It is brilliantly funny. So it's not a light watch, but it's really entertaining. There's a fantastic star turn by Jason Isaacs partway through as a Russian general who just comes along and dominates the whole thing and is, again, laugh out loud funny. Death of Stalin, really recommended.
Oh, brilliant. I could do with a laugh. Right, well, thank you everyone for listening. Please let us have your comments and feedback as normal. And as a reminder, we can be contacted on rachel.d'souza@rsmuk.com and andrew.robbins@rsmuk.com. Thanks for now.
Bye, everybody.